All right. Let's have a little discussion about why traders fail. Okay. And there's millions of reasons why traders fail, but there's four main ones that kind of stick out to me. The ones that I struggle with still, because you should know, as a trader, these things don't just go away necessarily. Some of them do, but you're constantly battling. You're battling with yourself. You're battling with the market, right? Um, and so let's talk about these things. So for starters, the first thing that might be obvious is you don't have a proven system, a strategy, a specific strategy. You should get acquainted with the market, watch it, see what kind of things it does over and over again. See if there's things that you see that you could build a system on. And it could be things that have to do with moving averages. It could be things that have to do with Fibonacci's. Like you slap a Fibonacci on something, and if it comes back down to 50%, you long it or whatever. This stuff you can look into. Like, I'm not going to tell you what strategy to trade, but there's endless stuff. You can use RSI, you can use MACD, you can just use pure price action. Trade the friggin' you can trade the daily chart for all I care, and you can just long if it's above the previous candle and short if it's below the previous candle. It doesn't matter. But come up with a system and then back test it, right? Go back in time, go back as far as your platform will let you go and test that strategy. And you either need to have something where you can, like I'm not going to do it now because my computer will get so pissed. If I use on demand, I can go back and it will play old charts as if it's currently happening in front of me. Do that, test the strategy. You can do it in TradingView. TradingView is awesome for wherever the heck it is awesome for back testing, and literally test it and track the results and see how it is. See if it makes money. If it doesn't make money, if it does make money, great. You can move on to the next step. If it doesn't, then keep tweaking it until it works, right? Which kind of will bring me to my next little tip, which helped me big time once I got this figured out, which is market context and trading in the proper context for your strategy, right? So I trade a trend following strategy, which is why I have moving averages on my charts. I have the doesn't matter. You could have these. It doesn't, whatever works for you. But I have the 20, the 50, the 100 EMA, right? And I use these to keep me out of chop. That's like the whole purpose of these is to try to keep me out of shit, like you have right here, right? I don't want to be trading this stuff. I hate this stuff. I love this. I love this stuff, right? And so if I look at a chart and my moving averages are stacked in order and they're spread out, I know that I can look for longs. And like, yes, I might get caught in some chop here and there. I might get some false breakouts. I do trade breakouts. But for the most part, if I just kind of, ooh, you're snapping, aren't you? If I just kind of follow the direction of the trend, there's going to be some nice little trades in there, right? And then once we get back into the choppy areas with all this stuff, I sit on my hands. I don't trade because why? This is going to cost me money. This is the stuff that's going to make my equity curve do this, right? And if I can cut this shit out, then my equity curve just kind of keeps going up. Now, granted, you will go through periods of drawdown, but what you're trying to do is shorten these periods as much as possible, right? So that your equity curve goes up as quickly as possible. And then, of course, if I see something like my MAs are spread to the downside and stacked in order, I might take some shorts in that area. Again, I'm sitting out all of this. I don't want this. I don't want MAs that are all tight and touching each other and crossing each other and all that crap. Because I like to trade trends, right? Right. Look, we get another trend. Great. There's longs all up in here that are nice little moves, But whatever works for you, whatever can help you find the trends, these beautiful trends if you're a trend follower. If you're not a trend follower, maybe you're a scalper. Maybe you like when things are in ranges. Then by all means, maybe only trade when the MAs are touching each other and you can buy the lows and sell the highs and all this stuff. But if you're a trend follower, you better find a way to to stay out of that stuff, you know? Um, and no strategy is going to work all the time. That's something you have to understand. Strategies are developed for certain environments, you know, which is why my strategy, which is a trend following strategy, only works in a flipping trend, dude. Okay, so find a way to keep yourself out of the environments that aren't for your strategy. And if I wouldn't do this right off the bat, but you might get to a point where you can spot the context of the market, right? And you know that you have a trend following strategy, and we're not in a trend, we're in a choppy, sideways market. Then you employ or deploy your other strategy, which might be a scalping strategy, where you just buy the low, sell the highs, and you just take your 5 points and you log off for the day. I don't know, but just be aware of the context. Okay. And then I also have another video on liquidity. You should definitely understand liquidity. That's a big one. But now let's talk about kind of the last two, which sort of come down to psychology, right? And people will talk about how psychology is like 80% of trading, and it really is. It's super important. And the reason it's so important is, say you've tested your strategy, say your strategy on your spreadsheet is fantastic. It's the bee's knees, dude. It makes so much money. If you don't have the patience to sit out markets you're not supposed to be trading in, and the discipline to truly stick to the strategy that you tested, that you spent like a year back testing, then what's the point? None of it's ever going to work if your psychology is dog shit, right? Which then brings me to kind of the underneath the psychology umbrella, which is poor risk management. Okay, and this one's huge. This is one of the biggest ones. And because new traders, they'll start trading, they'll get like a little bit of success, and they'll get a little bit more success, and they think they've got it figured out, and then they'll start to bet a little heavier, and then they'll have a loss, and they're like, oh well, shit, okay, well, let's start over. And then they start having a little success, and they bet a little heavier, and then they have a bigger loss, and then maybe they lost their whole account, who knows? But if you let the money get to your head in terms of fear of losing, and being greedy and wanting to add more so that you have a bigger winner, it's really going to screw you up. It's really going to screw you up. You need to have your system, stick to your system, and bet, air quotes, bet the exact same amount of money every single trade you put on. Do that 1 to 2%. I've talked about this. Don't risk more than that per trade, and always put the same amount of risk on every single trade, because you have no idea which trade's going to work and which trade's not going to work. And so much of your equity curve is going to be barely going anywhere. And then you're going to hit a nice little section of context where your strategy works really well and your equity curve will advance, right? And then you'll hit some chop, and you'll take a couple losses in that choppy area. And are you going to stop trading the chop, or just keep trying to trade the chop? Or are you going to stop trading the chop and save yourself a little bit of pain? Because most of trading is not letting this turn into, you putting on heavier trades because you just really need to get to all-time highs up here of your equity curve, and putting on heavier trades and then coming down and getting screwed. Or you have a rule where, if I'm wrong 3 times, I call it a day, right? But then you're having a day where you've been wrong 5 times, but you just keep trading, and now it's 6, and then 7, and then 8, and now you're spiraling, and now you're putting those heavier size on because you really just want to get back to where you were at the beginning of the day. And you just can't let this shit happen, dude. You can't. It's the demise of every trader. So keep your size consistent. Okay. Follow your strategy. It's going to hurt. You have to have the long-term mentality, dude. Things are going to suck. you're going to go through drawdown. It's going to suck. And then things are going to go well. And then you're going to almost make new, and then it's going to suck again. And you got to just keep trading your strategy, because then you're going to get into a spot where the market is in the context that your strategy likes. And then you'll break out to new highs, and then you'll pick up right here again, right? From right here. And then same shit. And you'll have drawdowns. You got to just keep your size consistent, follow your strategy, and don't spiral. Don't go in tilt, you know? And I think that ought to do it. If you have any questions, you let me know. I appreciate you. You're adorable. Have a great day.